AI is not free labor, and the bill is hiding in your margin. Everybody's telling you how much time AI is saving your agency. Almost nobody's asking, what's it costing you? Here's the uncomfortable part. AI is not free labor. It just sends you the bill in a place you're not looking. Not the timesheet, not the invoice. It lands quietly right in your margin. And let me show you where it's hiding. There's an assumption I'm watching agency owners make right now, and it's a dangerous one. The assumption is simple: AI will save us time. Maybe, maybe not. But that's not the real question. Saving time is only good news if the time actually turns into money. And that's a much harder question than, did this draft come out fast? The real question, the one I want you asking is this: is AI actually improving our gross profit, or does it just feel like it is? Because here's what I know after doing this a long time. Feels faster and made us more money are definitely not the same thing, and definitely not in the same sentence. And a lot of agencies are about to confuse the two. Let me tell you why AI feels free when it isn't. Think of AI like the intern. You bring on an intern, they work fast, they're confident, they'll make a first crack at almost anything you hand them, and on paper, the intern's cheap or even free. But you and I both know an intern is never actually free. Somebody has to train them, somebody has to check their work, and every so often the intern hands you something that looks perfect and is confidently completely wrong. So now your senior person is spending an hour fixing what the intern did in 10 minutes. That's AI. It's the intern that works at superhuman speed and is sometimes confidently wrong, and you are paying your most expensive people to supervise it. The speed is real. I'm not here to tell you AI doesn't help. It does, but the cost doesn't disappear. It moved off the timesheet and onto your senior team's plate where nobody's writing it down. So let's actually name the costs, because when I say AI has a price tag, people picture the $20 a month subscription. That's the smallest part of it. Here's the real bill: the software subscriptions, and not one, usually 5 or 6 across the team, prompt testing, the time your people spend figuring out how to get a decent output, Q&A time, somebody has to check what the machine produced, client review, the back and forth when the first pass isn't right, training, getting your team competent with the tools in the first place, bad outputs, the stuff you throw away entirely, and rework, the redo when it's almost right but not right enough to ship. And then there's the big one, the one that does the most quiet damage. Team members using 5 different AI tools and not one person tracking whether any of it actually made the work more profitable. Everybody's busy, everybody feels more productive, and nobody can tell you if the margin got better or worse. That's how agencies get fooled. The hours disappear from the timesheet, but the cost does not disappear from the business. Now, if you've watched me before, you know I don't panic about this. I run it through the numbers, so let's do that. The number I care about is not revenue, it's your agency gross profit. What you actually keep after the cost of delivering the work. And the benchmark I drum on constantly, the agencies that thrive hold people costs at or under 55% of adjusted gross income. 55, 25, 20. People, overhead, profit. Here's how AI fools that ratio. On one side, AI cuts the hours a task takes. Looks like a win for your people cost line. But on the other side, you added review time, you added rework, you added a stack of subscriptions, and you added training. If you're only looking at the hours that got faster, you're seeing half of the picture. You're celebrating the bar that shrank and ignoring the one that grew. This is the exact same trap as a beautiful P&L that still can't make payroll. It looks fine on the surface. The leak is one layer down in the costs nobody gave a name to. AI isn't shrinking your margin on its own, but an agency that can't see its AI costs can't manage that. And you can improve a number that you refuse to look at. So here's the fix, and it's a CPA's answer, because that's what I am. Stop treating AI like free magic. Start treating it like a cost center. Let me translate that, because cost center is accounting talk. A cost center is just a part of your business you deliberately track the costs of, even when it doesn't hand you revenue directly. Your admin team is a cost center. Your software stack is a cost center. Right now, AI is running through your agency as an untracked one. Money going out, effort going in, and no scoreboard. So you give it a scoreboard, you ask 6 questions, and you actually answer them. 1, what tools are we paying for, and does one person know the total. 2, which clients actually benefit from them. 3, which of our services got more profitable because of AI? Not just faster, more profitable. 4, where did AI generally reduce our labor? 5, and where did it quietly increase our review and rework time? 6, are we pricing the outcome or are we still billing like nothing changed? Answer those 6 and AI stops being a feeling and starts being a number. You'll find tools nobody's using that you're still paying for. You'll find one service where AI generally widened the margin. Lean into that one. And you'll probably find a place where AI added more review time than it saved and you're eating the difference. That's the leak, but now you can plug it. That's the whole move. You don't need less AI. You need to manage it like it costs you something, because it does. So let me bring it home, because I'm a CPA, not a tech guy, and you might wonder why the tax guy is talking about your AI stack. And here's why. Most accountants look in the rearview mirror. They tell you what happened last year. They will never catch this because we gave away our AI savings in rework. Doesn't show up as a line on a tax return. It's invisible to a historian. But when you work with a lot of agencies over a lot of years, and I've been doing this more than 23 years, you learn where the money actually hides. And right now, it's hiding in a stack of tools nobody's totaling and a pile of review hours nobody's tracking. The agencies that win the next few years will not be the ones using the most AI. They'll be the ones who know exactly what AI is doing to their margin. That's not a software decision, that's a numbers decision. Run your agency by the numbers and AI stops being a mystery expense and becomes something you can actually profit from. So here's what I want you to do this week. One question. Add up every AI tool your agency pays for. Every subscription across every team member. Do you even know the number? If you don't, that's the tell. That's a cost you're carrying and not managing. And that's a margin problem, not a technology problem. If you want a second set of eyes on where your agency's margin is actually leaking, that's what we do. Go to craigcodyandcompany.com and book a profit and tax analysis. We look at the real numbers and we tell you the truth about what we find. The link's in the description and pinned in the comments, because the goal is always the same. Keep more of what you make. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got 2 things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.